Good morning, everybody. Happy Thursday. It's April 2nd, 2026. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. Quick shout out to my niece, Melody Baker. Happy birthday to you, Melody. Happy. We're going to hopefully celebrate later on this weekend. As many of you know, today is the last day of trading this week. Tomorrow, markets are going to be closed. At least the equity markets are going to be closed. The futures market will be open tomorrow, but equity markets will be closed tomorrow for a Good Friday holiday. There's going to be the jobs report for March is going to be released tomorrow morning at 8:30 Eastern time. So we know that the markets are going to react to whatever that news is. Of course, speaking of reaction to news, boy, what a walloping the markets are taking so far. Quite a beating, down 98 handles. We were up down over 105 handles just a few minutes ago. Apparently, the markets did not like what they heard from President Trump last night in his address. So markets started selling off when he talked about the fact that they're going to pound Iran for another 2 to 3 more weeks. I think the market was under the assumption that things were going to be over much sooner than that, probably within days. He did get, he still didn't mention anything about his self-imposed deadline on April 6th, which is Monday, for an agreement with Iran. I don't know if that's still valid or not. Sounds like it's not, if they're going to keep pounding the country with bombs and missiles for the next 2 to 3 weeks. But we see markets selling off right now. We see volatility rising. We see a huge spike up in oil, crude oil. I've been talking about this for a while. In fact, I went on and talked to a couple of my colleagues over at the street, Louis Yanis and Sarge, along with Jason and Meshnik. We talked about things that I think were going to happen, and I said I think crude's going to make it up to the 125, 140 area. Seems impossible, right? Especially when all you seem to really think about these days is things that are positive that could drop oil prices down. Well, it's just not happening, right? There's been a lot of pressure on oil futures to go up. In fact, if you take a look at the front month, it's in backwardation now, and that means that people are scrambling to buy futures in the short end, and that's because oil supplies are starting to shrink on the short end over the next 30 days. And we could see a huge spike up in crude oil in 1 day, 2 days. Remember, we had those big spikes in gold a couple of times, and silver as well too. Well, you know what? You get enough people leaning the wrong way. People were leaning short. I saw some people had made some massive trades on shorting crude oil. They're going to get smacked around today because crude oil is up now $112 a barrel here right now. We could see 120, 126, 125 next week. So possibly tomorrow, maybe even in the next week. So we'll see how that goes. I don't think that is going to have a positive effect on the economy. In fact, I know it won't. In fact, it's going to bring in some inflation, unwanted inflation over the next several months. And look, you know what? With higher inflation, it means the Fed is more sidelined than they ever have been. In fact, earlier this week, I want to say on Monday or even late last week, there's the Fed funds futures starting to price in rate hikes. Forget about rate cuts, rate hikes over the next 5 to 7 months. So those are on the table. And in fact, there's going to be another meeting later on this month at the end of April. It'll be Chair Powell's likely last meeting unless he decides to stick around and if there's no new chairman that has been voted in. I think Kevin Warsh is up for a hearing testimony and so forth with the Senate for approval. And if that doesn't get underway, Chair Powell said, listen, he has the authority to stay as the chair until that is resolved. In fact, he may even stay on as a board member for a couple more years. So I think by and large, we're going to see a lot of volatility here in this market. We've seen a lot of volatility here. One of the things that I noticed, even as the markets rallied on Tuesday sharply and then rallied yesterday, but petered out, I did notice the fact that volatility did not come down as much as you would have thought. In fact, take a look at this chart here, right? Let's look at this together. You can see that the VIX has been in a sharp uptrend for 3 months. We hit about 13 and change at the end of the year of 2025, and have been making higher highs and higher lows all the way up to recent levels, recent high levels 35, just about 3.5 weeks ago. This uptrend is still in place. We've got higher lows in place, right? In fact, if the VIX continues to go higher here, gets through 30, 31, I still think we got there's going to be a big spike in VIX one of these days. Could be accompanied by a big spike in crude oil, big spike down in S&P futures. 6,100 is where I'm looking at, 61, 6,100, 6,150 on the S&P 500. And of course, we closed at 65.75 yesterday. If we open up down about 100 points today, will be 64.75. S&P futures just a couple of nights ago did get down to about 63.93. So that is about 130 handles below where we're at right now. And everything is potentially on the table here with higher volatility and people getting worried and nervous about where policy is going to be at and how much longer this war is going to last. So there's been a lot of rumors, a lot of potential that the ground troops are going to be heading over to Iran. I don't know if that's true or not, but certainly the market is not going to like that because it means this war is going to be extended even more in time. So the more this war goes on, the less chance of some of these companies are going to continue their robust business that they've had for the past couple of years, right? We're gonna hear during earnings season over the next 5 to 7 weeks when earnings kick off. We're going to hear some companies say that their sales cycle is going to be extended. And what does that mean? That means that some of their customers are going to tell them, hey, look, you know what? We're going to hold off purchasing your equipment or your software or whatever it is right now. Talk to us in September when things seem to calm down or simmer down. But right now, we're not doing that. So I think that's what a lot of these companies are going to be facing when they have to report their numbers in the next few months. Next few weeks, rather. And I think over the past couple of months, that is the uncertainties that their challenges that some of these companies are having to face. So higher oil, higher energy prices are not good for the economy. And we're going to see that happen, but it is what it is. So what can you do? What can you do is you can raise a lot of cash if you haven't done so already. I know a lot of people in our chat room have done that and done it in a big way. Congratulations, well done. Sitting on the sidelines, being patient. I've been doing the same thing. I have not been trading very much at all, especially you can see it in the chat room. And that's fine. I don't need to do a whole heck of a lot. I can really do a lot of damage by trying to play this choppy market. That's not my style. It's not the type of environment I want to be in. So I choose to stay out for right now. I'm a trend follower, a momentum player, and there is no momentum right now. Well, there's momentum in the VIX. You can see it right there, right? But other than that, there's not a lot of momentum right now, and everything is news driven. I can't trade the news headlines. So you know what? I'll just stay out right now. But having a lot of cash is one thing. Having some puts on, I do have a couple of puts on, and those are going to work nicely. Didn't work very well earlier this week on Tuesday and Wednesday, but so what? You know what? I still had some protection on. Took some of that off earlier in the week on Monday, and still have some of that on. I have some oil stocks. COP is one of my favorite ones. ExxonMobil is good. Also PSX, Valero. Marathon Oil. Some of these names are going to do extremely well as long as oil prices stay up. Oh no, almost to 113 now on crude oil. Gold is getting smacked around. Silver is also down a little bit, about 7% here right now. So these metals are something to watch for as well. And let's take a look at a chart here for you. Another one, S&P 500. So we got near the 50-day moving average. which is this. I'm sorry, near the 200-day moving average right over here. We're well below the 50, which is right here. 50-day moving average 67.80. 20-day moving average. We nearly got to that yesterday. And usually an oversold rally will take you up to that 20-day moving average and reject it and come back down. And we nearly got there yesterday, and the 20-day moving average is coming down fast. It was at 66.50 yesterday, closed at 66.20. It'll be down below 6,600 later on today, so that'll be more formidable resistance. And if we get back into this large candle here from Tuesday, there's going to be a lot of people going to scratching their heads, wondering, "Oh my God, what did I do? I got in there for one day. I thought the markets were had built a bottom over here, and now I'm in trouble." Right? So you're going to see a lot of people coming out and doing some more selling over here. So that's something you got to be mindful of and be watchful of as well. Is this a bottom? I don't know, and frankly, I don't care. Neither should you. We're not fishing for bottoms. Well, at least I'm not. I mean, some of you may look for bottoms and tops. If that's your game, good luck. More power to you. Go for it. But you know what? Frankly, trying to pick bottoms is a real dangerous game here. Look at this downtrend in the S&P 500. I can spot probably like 7 bottoms here that didn't hold. 7, right? Right here, right here, right here, right here, right here, right here. Okay. Some bottoms that don't hold. They smack you around a little bit and they come right back down again, and then you're in a loss situation, right? And this is just the S&P 500. Nasdaq's even worse. Russell 2000 looks really, really bad. Remember, the S&P 500 or the Russell 2000 IWM had a great start for 2026. It was up about 15 days in a row, up about almost 10%. It's lost just about all of that and then some. And it finished the first quarter on Monday or Tuesday, only up 1%. It did have a nice rally on Tuesday to gather some of that steam, but losing some of that today, and we'll be back in the negative by the start of trading today. So, having some cash, having some puts, fewer long positions on. Protect those positions. Sell some calls against it. If you have some stocks on, sell some calls against your stocks and take advantage of this high volatility right now. The VIX is up about 27%. You can get some nice premium if you go about 2-3 months out and sell some calls against your stocks. So there's some things you can do to be defensive here. There's some things you can do to protect. Remember, as my good friend Rev Shark, Jim DePoria always likes to say, the return of capital is sometimes more important than the return on capital. Okay, so that's going to be it, everyone. I again appreciate all of you spend a little time with me. But first, before we go, just a quick note, just to remind you, I talked about this on Monday. We have great resources on the web on the Explosive Options website. The chart of the week, which I sent out yesterday, a new stock every week that I do the charts on, and I put it out there on the YouTube channel. Daily Bites, which we're doing right now, which we do every Monday and Thursday. Options trading ebooks. We have a lot of ebooks on the website over here as well too. You can see all these down over here. Educational webinars, which I'm going to be bringing to you a new webinar later this month with Larry Tentarelli. I have a few other guests coming up, by Chris Versace and Lindsay Bell coming up, Kenny Glick as well, Dan Ushman from TrendSpider. So you've got a lot of good stuff for you to learn. It's all free. Options Insights blog, which I come out with every Monday morning. It's very readable, good stuff. I've been doing it for almost 15 years now. There's a whole library of blog articles that I've been writing, trading tutorials, and an online mini course which you can take over several days as well too. So there's a lot of resources for you to learn from. You don't have to buy the services. If you want to buy the service, that's great. I think you'd have a great time in the chat room. You'd learn a heck of a lot more than anywhere else on the planet about options trading. But if you're a little bit of a beginner, or if you're a little bit shy about getting in here, just come to the website, see all these different resources here. You can build a great education just on the stuff that you're seeing on the screen right there. So go to Explosive Options and you'll see under trading resources, all these options here for you. So that's going to be it, everyone. Have a great weekend. Happy Easter to all of you. Good Fridays tomorrow. And if you celebrate like I do, happy Passover as well. That was the last night. And I'll see you guys all on Monday morning. Again, happy birthday to Melody. Talk to you guys later. Bye.